Boy, oh boy, do we have a crazy day in the stock market today, guys. Let's just dive right into it. We had the S&P 500 go up 1.6% on the day. We had the Russell up 1.3%. We had the Dow Jones up 1.2% as the NASDAQ led the way up over 2% on the day. And get this, guys, the VIX keeps on going down. It went down 5.6% on the day. So we're going to break down the markets in this video like we always do. And we're going to break down some stocks as well, some charts. So if you all find value, smash that like button. Make sure to subscribe. And of course, take a sip of your coffee. Yes, it's about 6 o'clock, guys. I'm still sipping a coffee. It's all good. I appreciate you all for tuning in as always. And now let's dive into the video. So check it out. We uptrended all day, all across the board. Literally, we did not see a substantial pullback at all throughout the day on SPY, on the NASDAQ, the Dow, the Russell. And this all stems from what we got yesterday from the Atlanta Fed president saying that he could see, rate hikes pause, mid to late summer. That caused the stock market to explode, which, mind you, we covered that in my last video today, my earlier video. Go check it out after this video. And that just caused the markets to rip all day. I mean, SPY in the pre-market was under 397 at one point. It was right around 397, and this thing almost closed at $405. We're talking about a 2% move from that pre-market low to where it ended up closing, and Triple Q went up over that. You could probably guess that, right, guys? Look at this. In the pre-market, Triple Q was right around 292.75. It went all the way to almost 300. In fact, it didn't close above 300, but right now after the bell, it did peak a little bit above $300 a share. That is a move of 2.3% here on Triple Q. That is pretty impressive. And if we pull up the 5-day chart, you guys are going to see a pretty substantial reversal on the 5-day chart. And you'll see that probably on the 10-day chart, right? Yeah, you see that. We're at a multi-day high. We're above the moving averages. And this goes for SPY as well. Both of these charts look very similar, right? SPY's reversing on the 10-day. The 5-day looks pretty good as well. And if you pull up the 20-day, that is where you're going to notice we are still at a pretty big resistance. So keep that in mind. This point right here, this trend line, we're still under that point, right? You can see clearly we're still technically at a lower high, and I'll draw these out for you guys so you can see them, right? Lower high number one, you got another one right there, and you got another one right there. So technically SPY and Triple Q, let me pull it up, both of them are still in a downtrend on the 20-day chart. But next week, guys, let me tell you, is going to be the moment of truth, right? If Triple Q, if SPY, if these two ETFs, which Triple Q, tracks the NASDAQ, you guys probably know that SPY, the S&P 500, if we can see a breakout of, let's say, 305, 310 on Triple Q, especially 300, that could be, a spot where it would legitimately start to reverse. And we might see something like this occur, right? Where we might start going up to the highs from the middle of February, being about 310. Maybe we end up plowing through that point, right? If SPY starts breaking out of, let's say, 405, 410, that's where this thing could start to legitimately reverse, which right now, again, we're still in this downtrend. So you got to keep that in mind, guys. So that's pretty much what I'm seeing right now. It's pretty much what I said earlier today, guys. If you caught that video about the Fed, where we talked more about Atlanta Fed president, what he said, and what caused the markets to moon essentially today, which is what they did. I mean, it was a crazy day overall for the markets. And I was watching CNBC. I think we just had our first green week for the S&P 500 in the past 4 weeks, I believe. So that's good. I mean, we started off the year very strong. In January, the markets exploded. Then in February, we did see a little bit of selling, especially in the latter half of February. So now we're starting to ratchet back up, right? The markets are starting to continue the trend by the looks of it. But again, we're not fully breaking out yet. So don't get too excited. Today was great. It was awesome. But don't get too excited because next week we have a jam-packed week. Powell, the Fed, this month in general, right? Jobs, we have to see how the data is looking, and that could have a material impact on what the stock market does next week. You guys know that, and you have to be ready for anything to happen at this point because we've seen the market turn on a dime time and time again, and that could happen again, guys. That could happen again as we are at a very vulnerable spot here on the chart. So what do you guys think? Let me know your thoughts down below in the comments, and if you haven't hit the like button yet, or if you haven't subscribed yet, hit that subscribe button, hit that like button. I appreciate you all as always. And now let's break break down some stocks. We had AMC do very well today, which we covered a little bit earlier. Let's do another breakdown, a follow-up, and see where this is at. So AMC broke out of 650 a couple days ago. You guys probably remember that. It had a crazy run to about $8, $8.20, and then it pulled back. It pulled back substantially, and it pulled back very, very fast. You guys have heard that saying where stocks take the stairs up, elevator down. That's exactly what happened here. We had AMC take the stairs up from 450 all the way up to 850, which took about, a couple weeks to do. And then in just 2-3 days, it lost a lot of that gain. Not all the gain, but a lot of that gain. It went from 850 down to about $6. Now we're back at 650. So the fact that we actually had an 8% green day today, we closed over 650, that is a very, very good sign overall for the bulls, right? You guys can see 650 here was the high from the end of February, also from back in the middle of January. So the fact that we closed above that point, very good sign overall for the bulls. Now let's see if this could end up making a move back to the low mid sevens. That's kind of what I'm looking at next here, as that is the next gap to fill. But we have to play devil's advocate here, guys, because if I zoom in here a little bit, we do have potentially another head and shoulders in the making on AMC. Do you guys see this right here? We have the left shoulder, you guys see right there, the head, and then we have the right shoulder. You guys see that? So as of now, we're still technically under the neckline of this head and shoulders that I just drew out. So this is going to be interesting next week, guys. Do we break through 675, which is that neckline? Let me set my alert right now at 675. Do we end up breaking through there and maybe getting a leg up? If so, that is where we could start moving to that $7.50, $8 range again, maybe even higher. But if we fail at 675, and especially if we dump under 650, guys, that right shoulder could be well on its way to starting to complete. So keep that in mind here on AMC. That's kind of what I'm seeing right now. Let's see here. What else ended up moving today? NVIDIA had a pretty good day. Let me take a look at this one. So NVIDIA, guys, this one's trucking along. It's doing very well on the 4-hour chart. It looks like we just hit, I know it's crazy, but it looks like we just hit a fresh high at $239 today. The stock went up 2.5%. And what pops out to me right away, guys, is this bearish divergence on the stock. Do you guys see this? Let me make my face a little bit smaller. Maybe you'll be able to see it. There we go. We have a bearish divergence here on NVIDIA, which makes me believe we could be setting up for a little dump off. I'm a little bit nervous about that. Well, I'm not in the stock, so I don't have any skin in the game right now, but it's vulnerable to a drop. That's the way I'm looking at it here, as we do have, again, that bearish divergence. So NVIDIA, it did well today. The chart looks pretty decent, but be mindful. Bearish divergence, it's a little bit overbought. If we do see a bit of a pullback on this, I would not be surprised. I think a better entry point would be anywhere between 205, 210, maybe 215. So that's a little update there on NVIDIA. What else did we have move today? Ooh, look at that. Pinterest today went up over 4%. Great day for Pinterest, which you guys know if I clear the set here, and actually I didn't even have to clear the set, but let me get the channel tool out and show you guys what's going on here. We have Pinterest clearly now bouncing off the bottom of this uptrending channel. You guys see that clear as day. And with today's 4.2% move, we ended up breaking past not only the 50 SMA, but also the 180 SMA here on the 4-hour chart. So that goes to show this wants more upside. Bulls are gaining momentum, no doubt about it. And next week, we could be playing towards that, top of the channel. Maybe it shoots up 27, 28, maybe it goes up even higher than that. And if I show you guys the 20-day chart, what do you see right off the bat? We have an inverse head and shoulders. You guys see that, right? We have the left shoulder, the head, the right shoulder. We plowed right through that, moving average, both moving averages the past couple of days, and we're now at a multi-week high. So in my opinion, Pinterest looks pretty dang good. It's poised for more upside by the looks of it. I could be wrong, guys. Please don't trade or do anything based on these videos. This is just my opinion, but by the looks of it, it looks pretty good in my humble opinion. And it looks like here Adobe also did pretty well today. Let's pull it up. Adobe here looks like it is holding trend. You guys see that? We have a higher low here, higher low, higher low. And although it's still technically under both moving averages on the 4-hour chart, the fact that we did hold roughly 320 heading into earnings in a couple weeks, that's a pretty good sign. Actually, we have earnings on the 19th of March. That's going to be interesting. Actually, 15th of March, which is less than 2 weeks away from now. So next week, what I'm going to be looking at on on Adobe, guys, is whether or not it breaks through this 350 mark. 350 is massive here on Adobe because that's right by the moving averages on this 4-hour chart. If we do break out of that point, guys, and mind you, if we zoom in a little bit here, 350 was resistance all throughout the middle of November, heading into December, heading into January. Then we ran through it in the end of January. We ran all the way to about 400. So right now, yeah, 350 is a very big resistance, guys. We have to get through that point. If it does, there could be even more upside here on Adobe, but we're not there yet. Let's be patient. Let's let it play out. And if you look at the 20-day chart, it is still technically in a downtrend on this time frame. So 350, set your alerts. That's a very big spot for Adobe. And before we continue on with more stocks, guys, if you haven't gotten your free stocks yet, up to 17 stocks from Moomoo, check out that link down below, or you guys can go to stocksurfest.com/Moomoo. It's right up here. You guys see it. Once you open up an account with Moomoo, you get a free stock. And then if you deposit at least $100, you get 4 more free stocks plus 2 shares of either AI, ticker symbol AI, or ticker symbol BBAI. So right off the bat, if you deposit at least $100, you're getting 7 stocks. And if you deposit at least $1,000, you get those 7 stocks and 10 more stocks. So yeah, up to 17 stocks from Moomoo, guys, depending on how much money you deposit. Again, if you deposit at least $1,000, you do get 17 stocks. It's crazy. Best deal right now for a new brokerage, and it's limited time, guys. And of course, it is an affiliate link. It helps out the channel. So once you get your free stocks, it also helps out the channel. I appreciate you all as always. So use that link down below, that Moomoo link down below, or go to stocksurfest.com/Moomoo. And now let's continue on. So let's take a look at some other big tech names. Today we had a lot of upside across the board. I mean, you guys know that, but especially in big tech. We had Google up 1.8% on the day. It looks like here buyers are coming in right at the trend line here that I just drew out, which is a good sign for the bulls. Now let's see next week if Google could end up breaking past the mid-90s, especially 96. That's right by the 180 SMA here on this 4-hour chart. If so, guys, if we do break out of that point, we have a wide open gap to 100, and then 100's another big resistance. If that's able to break, man, the sky's the limit for Google in the short term. I think there could be more upside there, but don't get too excited, guys, because like a lot of other stocks here, we're still at a big resistance point, even though Google had a great day today. Meta had an even better day. You guys probably saw this in my last video. Meta went up over 6% on the day, closed at 185, and it's clear as day that it did not want to fill the gap down to 155 like I was hoping for it to do. But, you know, it's clear that we got the buyers at 175 to push this thing higher. Now, at this point, I would not be surprised if it were to go up even more, maybe towards 190, 195. That's what the chart is showing, at least in my opinion. Then we had Apple today go up a whopping 3.5%. This also got buyers right at the trend line here. You guys can see if I actually remove it and draw a new one. You guys see clear as day, buyers are coming in. We actually broke out of the neckline of the head and shoulders as well here on Apple, which is a good sign overall for the bulls. I butchered that, but you guys can see we're well above the neckline, which was right around 147, 148. So Apple's looking pretty good here, up 3.5%. It went up 3.5% on the day. What else here? Amazon did pretty well today, up over 3% on the day. This is still in a head and shoulders. You guys see that, so keep in mind we do still have a head and shoulders here on Amazon. But if it's able to break 100, $102 where my alert's at, that's where we could get a legitimate reversal. Let me pull up Microsoft and see what's going on here. Microsoft ended up, it looks like, bouncing off of, let me zoom in a little bit. It bounced off 250. It looks like now it filled the gap to 255. You guys can see that was the high from the beginning of December. Now for next week, 255 is the main level to watch. If we do crack above that point, we do have a lot of, not a lot of upside, but it could start to fill the gap to 265, which was the high from the middle of December, also from a couple weeks ago back in the beginning of February. Then if 265 were to break, we have a wide open gap to 275. So don't be surprised, guys, if Microsoft were to somehow find its way to 265 to 275 in the short term. That's what the chart is showing. And let me actually set my alerts here. I'll put one at, let's say, 257. Mark is at or above. Then I'll set another alert at $265, and we'll see where it goes from that point. Let's see here. What else ended up doing well today? We had Disney on the day go up over $100 a share, back over $100 a share, which you guys can see it was at 120 a couple weeks ago, back in the beginning of February. So about a month ago, not even a month ago, we had Disney at about 120. Then it dropped all the way down to 98 in the span of a couple weeks. I mean, not even 2-3 weeks, guys. That's a 20% drop. So now we're seeing a recovery in Disney. Nothing crazy though, nothing worth writing home about. It seems like it's just a relief rally at this point. But if we're able to start getting a move past, let's say 105, $107 on Disney, that's where we could say, okay, it's a legitimate reversal. So I'm going to set my alert at 107. Let me do that now. Mark is at or above 108. Let's do 108. Mark is at or above $108 a share. And if that were to break again, that's the high from about the end of October, early November. That'd be a very good spot there for the Bulls. Very, very good spot for the Bulls if 108 were able to break. So with that being said, guys, I don't want to make the video too long. That's pretty much it. All you guys got to know is the Fed saved the stock market yesterday. And who knows if this carries into next week. It might not. Time will tell. If you enjoyed the video, hit that like button. If you want to see more content for me about the stock market, the economy, money in general, well, I guess Stas Talks Money is the more money-focused channel. Go subscribe to that channel. But if you want to see more, chart breakdown, stock market content, hit that subscribe button. And don't forget to get up to 17 stocks from Moomoo and up to 12 stocks from Webull. All those are linked down below. And you could also join my Patreon. All the details for the Patreon are down below as well. I'll catch you guys in the next video. Peace out.